This is my video log. The date is December 12th. Now, you don't gonna watch this. You don't have to watch this. I mean, trigger warning. There's no edits in this video. It's just a straight shoot. And it can get a little bit dark. We'll see how this episode goes. I'm going to review the account as I usually do. I'm going to show you my positions, some relative performance. I'm going to scroll down through everything and show you in depth this completely transparent account. But the topic today is going to be, the fact that I suffered some losses, not unlike most people out there. And obviously it's part of the journey, it's part of the deal. And I have a hard time, but I have to stay true and record how I'm feeling. And it's one of those episodes that I don't necessarily want to record. I was thinking of recording episodes and putting them private, but I don't know, I started doing everything public, so I'm just going to continue to do it. But this is basically to record my mental state and where I'm at this point in the journey. Now, this video log, I started doing it in August 2018. Right now it's 2022 December. So it's been over 4 years, maybe 4.5 years almost. And definitely seen some progress, and I'm trying my best to kind of like zoom out and look at the big picture and see where I'm at. But day to day, it's really hard to manage emotions. Like, I think I did a better job managing emotions than in 2020 crash than I am right now, which is forcing me to kind of take a step back, remove myself from what I'm doing a little bit so I can gain some objectivity. So it's just a struggle that I'm having at the moment. So I want to share that. Anyways, let's go through the account and maybe I'll talk about it some more if you want to hear. This is the account. I'm sitting at 157. Now, it's not as big of a loss in objective terms, but it hit me mentally pretty hard. And I'll show you what happened last week in a second. So this is the one-day performance. It's a Monday. All the markets are up. I'm just up with the markets. The 1 week performance, it looks like this. This is a $20,000 drop when most people are positive. And I know it's hard, you're not supposed to, compare yourself to other people and whatnot. I compare myself to the market. And so if I'm not beating the market, it's not a good thing. This big drop here basically is because of the Smith & Wesson earnings. Now, Smith & Wesson is a company that I own. I'll show you the position in a second. I own like 0.02% of the company, so I own a large share of Smith & Wesson. And things were starting to look optimistic up until the earnings report. They were coming out of the beginning of the hot, product season. And so their sales are supposed to be going up, but they missed on revenue. And although, their management and CEO and whatnot, they sounded a little bit optimistic on the call, saying that, they're blaming things on macroeconomic environments, inflationary pressures, competitors doing like, selling products for 80% off or something like that, and they just weren't willing to do that. And that's fine, and the inventories look good and whatnot, so there's supposed to be some optimism, but the miss is actually quite substantial. I'm not exiting the company, by the way. I'm still in it, I'm still holding it, but I'm in a bit of a pickle because I should not be holding this large of a position on margin. So I don't know how to exit the margin part of it without growing myself out of it, if that makes any sense. So let me just run through the positions. These are the option positions here, and you can pause the video at any moment to try to figure out the exact positions. I also put on some bad options, which I normally don't buy options, and I don't know why I did there. So I probably lost a few $100 doing that for no good reason. Now, Apple is still doing all right. Realty Income, Main Street Capital, Paramount. Smith & Wesson had another down day. So you can see I own 8,500 shares of Smith & Wesson. Market value right now is $79,000. But this thing used to be 103. So just from Smith & Wesson, I have about, let's see where the figure is here. Oh, there it is, $31,000 loss. It says it right here, 28.17%, 31,000. So this account would have been, instead of 157 could have been wrong tab. Could have been 188. That's a really big difference. I was pretty confident in the contracts when I entered them, and I knew that there was a risk coming in. So to be more clear, what I did was I sold options. So hold on. So I sold put options expiring maybe like a month away, through not this earnings report, but the previous one. That's how I end up with so many shares. And I found value even at, $15 or so, and then I scaled down and bought more at 12.5, etc. And now the company's trading under 10, and I think there's still value in it. However, the revenue number is not very promising at all. So you can see how juicy there and fat the options are. You can get paid, $100 per contract here, for selling $10 puts out in January, and that's after the earnings. So that's pretty attractive still. Now imagine after an earning, like let's say in March, $10 put, or even further, they get pretty attractive, these puts. So, I got caught into that. I thought it was good. I did a lot of research. I've actually done a lot of videos on Smith & Wesson, and I definitely found a lot of value in there. So I know that they've spent a lot of money moving locations due to regulatory reasons and whatnot, and that location is costing a little bit more than I personally anticipated. They said that they're running on budget, although the high end of the budget, which it seems like it's pretty large budget, because they had like 70 million on hand and now they have 5 million on hand. I don't know where that 65 million went, but I'm expecting the company to be going in debt at this point by next quarter. And now, how do I feel about investing in companies that are in debt? You know how I feel about companies that are in debt. If they're running the books negative, it's not a good thing for me, especially when they're a heavy, like an industry type of company where they have to buy materials and whatnot, and it's no longer promising. So my attitude towards the company has turned down a little bit, and so I don't like that they're going to have to be going, and I think this is costing quite a bit of money. Now, from the saving grace here is that the company is still profitable, meaning like every quarter they're going to be making money, they're going to be paying that debt off, but the bleeding has to stop. I mean, their facilities, I don't know how long it's going to take them to complete their facilities. They're building new facilities and whatnot. So maybe I have to call up the CEO and interview them to figure out the exact, but they're not going to share a lot of this information, right? They can't share. A lot of the stuff they do is confidential, and it's going to hurt competition if they share it. It's also against the rules. And so we have to deal with the public information that we do have and the best guess that we can muster. So, I'm just doing best guess scenarios here. There's a lot of analysts that can look deeper, but quite frankly, even the analyst reports that one could read online are pretty optimistic. They're not very pessimistic about the company. However, price action disagrees, right? Price action is the real analyst. I mean, people are voting with their money. Like, anybody can write anything on paper, but unless they put some money down, it doesn't mean anything. So, here I'm in this situation. I'm still holding, and I plan on to hold the company to see at least through the next quarter how much in debt they're going to get. My guess is if they continue to bleed through cash like this, the company is going to probably drop into the sixes again. Let me see what the last time that it was in the sixes. I mean, it's going to be ugly. Probably drop to the $300,000 mark. But go up 5 years. Oh, they were 443 back in 2019. There were a lot of changes that happened back then. They separated from the Outdoors brand. So the figures are kind of muddy. You can't really make an accurate comparison about what the company is supposed to look like in the future or present versus what it looked like in the past. Back then, it's not a fair comparison, so we need to find out a new valuation for the company. But isn't that always the case? Things change with companies all the time, and so I've my comments, in the thumbnail. By the way, do you guys like the little rebranding there? I've kind of switched it up a little bit. doing some new thumbnails. Let me know what you think about thumbnail. But I'm sorry that it's kind of a depressing video to try this rebranding on, but I've been experimenting with a lot of shit in the past, so. But this is the latest one. Let me know what you think. I'm really curious. But anyway, so there's the apathy pieces that, like, I kind of checked out last week. I needed a break from all of it, suffering this kind of loss in my prediction power over and over again in the same company like 3 times in a row. It's pretty rough. I thought I was getting towards the bottom, and the company just kept bleeding and bleeding, and now this move is costing more and more and more. Or if it's not costing more, I'm even more concerned, right? If the money's going somewhere else, I'm even more concerned because it's not going to ad revenue. It's not going to the move. Where is it going? I don't know what's going on. So that's even more concerning. So given all that, I kind of checked out, took a step back, and intentionally or unintentionally, I stopped caring a little bit but when you stop, you're supposed to do something about it, but I didn't want to. Like, my reason brain, my strategy and the way that I'm doing things won't let me, like, deviate from the plan. And so I'm going to stick to the plan. If it ruins the account, it ruins the account, and that's fine. Now, I don't regularly talk like this, right? Even if you look back in the videos in March, 2020, you'll see that I was actually more optimistic than this through the heart of like 30%, down drop in the S&P or something. I was more optimistic then than I am now when it comes to the prospect of my account. But I feel a little bit locked into this decision, like I have to ride it out. And I could sell out and take the loss, the 30 grand loss. It's a possibility. But the thing is, like, the damage has already been done to some extent. Like, there's probably more damage to be done, but no one knows how much is priced into the stock at the moment. The future bad quarter could also be priced in. I mean, this bad quarter was kind of priced in, maybe a month ago or so, or 5 or 3. So I just don't know how much of it is priced in or not. Plus, there could be an upside surprise. I mean, it is the holiday season. There is plenty of reasons to be optimistic. I know that there was a strong Black Friday among all retailers, so I'm sure that Smith & Wesson sales were up as well. A record-setting Black Friday, I believe. I do know that higher ticket items are a little bit lower than before, but as far as total volume, not excluding inflation, so keep in mind these are nominal numbers, is a record high. So I don't know how that affected or didn't affect Smith & Wesson. They said that, they haven't been advertising, but they will now. They'll start pushing the advertisement game a little bit because otherwise they're going to lose total market share. So they are counting on brand name, but brand name alone isn't enough, and there needs to be some execution. So anyway, so that's Smith & Wesson right there. It's a sad story. I mean, 30 grand is quite a bit. It's quite a lot. And if now they start issuing shares, that's going to erode my total ownership of the company, which is bad news all around. And if it was a smaller position, I'd probably sell, but I'm so invested into it, and I know that's some cost fallacy. I'm aware of that. But I'm pretty invested, and I still think it's a good company. So I made my calculations when I made them, and I'm going to stick by them. And hopefully I'm right in the long run, despite of what I'm experiencing right now. And that's the major reason why I'm doing these video logs, is so I can jot down exactly what I felt. I can look at myself and listen to myself and figure out, okay, this is what I was like at this point in my investing journey. So back to the account here. Let's do, so that's the 1 week, negative 20 grand, 1 month performance, 3 month performance. I'm basically getting killed by every metric in the market now except the all-time chart. So even on the 1 year and the year to date, I think I'm about even. The all-time chart, that's why I said it's good to keep things in perspective. I'm still on the positive side since August 18th, August 28th, 2018. I'm still up, 114% or so. The graph is flat before that because there wasn't much money in the account back then, before I started taking this a little more seriously. Well, a lot more seriously. So you know, it would be nice to be at the peak of 2014 or so, but reality is that I'm down here in the 150s, and who knows what's gonna happen in this at the end of December. Could be a rally, could be a crash. Nobody knows at the moment. Um, what else we're gonna say? Oh yeah, let's do a little comparative analysis here to figure out how the account did against the market. So one day it's losing, you know, 1 week definitely losing, monthly losing, 3 month losing, 1 year about the same. So 1 year and year to date is about the same. 5 year winning. So I'm only winning in the very long term. This button right here, the retirement thing, I might make another video about it in a minute. But that's the relative analysis. I don't know what else you want to see here. Maybe we can go to the investment tab in the account so you can see the account overview this way. So this is how much margin I have, $113,500 borrowed from Robinhood. This is my equity, 157. Combine them together and you get the total market value of the account at 270,000. This is my holdings by equity. I have Apple at number 1, Smith & Wesson number 2. Now I have more distant number 2. They used to be the same at 100,000 or more. But now Smith & Wesson has dropped. Then Main Street Capital, Realty Income, and Paramount Global sitting at the bottom of 23,000. So I've concentrated on 5 positions. I do like all 5 positions, you know, but Smith & Wesson is really hurting me. That's kind of one of the downsides, right, of investing in only a few names, is that if one of them goes, one of them drops like 10, 20%, 30%, you really feel it. Like your account really feels it. If you're diversified across, you know, 500 companies like the S&P 500 index or something, then you're not worried as much, because if one company blows out, you know, it's only costing your account like 0.5% at the most or something like that. So yeah, so downsides and upsides. You get the upside is that with that volatility comes riches, but also comes losses, and this is the reality of the situation. So hopefully this wasn't too depressing. You know, my goal is to record my feelings. So, you know, if you had some losses, I want to hear the stories below. But other than that, I don't feel too bad. You know, like I'm still trying to stay by plan. I'm trying to remotivate myself and you know, keep doing what I'm doing. So it's not like the end of the world or anything. Like, don't be calling any depression services hotlines or anything like that. Like, I'm fine. It's just you know, the investing bit's a bit frustrating, and I'm just trying to navigate it as calmly as I can and as rationally as I can without letting emotions get in the way. But let me know if you have a story about a big loss. I'm curious to hear it. Part of the reason why I started these video logs in the first place is to connect with people and to try to figure out like how they are on their journeys and what kind of stories they have, and some of the lessons that they've learned. You know, I regularly look at other people's portfolios, whoever happens to post on YouTube or other platforms, to try to just figure out how they're doing and what's going on with their account and some of the decisions they're making and the rationale behind it. So we're all trying to learn. But anyway, share some stories. Let me know. And also, I did a video on, what is it, Intel. So let me know if you like that one. All right, that's it for now. Peace out.